Hello and welcome to the Money Talks COVID-19 Daily Bulletin for Thursday, May 14th. I'm Anthony Okolia. In a few minutes, I'll be speaking with Vitaly Mosinov, Global Technology Analyst with TD Asset Management, about technology's resilient performance versus the broader market and some key COVID-related themes that's driving the sector. But first, a quick wrap of today's headlines. More evidence of the economic impact being felt by the coronavirus. Canadian manufacturing sales plunged more than 9% in March, coming in at nearly $51 billion. Many factories have had to shut because of low demand. Another hit to the US jobs market. Weekly jobless claims rose by almost 3 million last week, bringing job losses over the past 2 months to 36.5 million. Oil prices have been climbing after a surprise decline in US weekly inventory numbers. The International Energy Agency says its outlook for global demand is starting to improve. And finally, another example of how the coronavirus is changing how people shop. Visa says that in Latin America, in its March quarter, about 13 million people made e-commerce transactions for the first time ever as more shoppers moved online because of the COVID-19 lockdown. And that's a wrap of today's headlines. Next, my conversation with Vitaly Mosinov. Vitaly, technology has been one of the best performing sectors versus a broader index entering into 2020, correct?
Absolutely. It's been a pretty good ride, especially if you zoom out, take the last 5 years, that period of time, 2015 to 2020. The market's done well. The overall market, the S&P 500, it's up 40%, about 7% per year, not too shabby. But technology, it's just been wow. It's more than doubled the basket of technology companies over that period of time, and performance has been very, very strong.
And when you talk about outperformance, more recently, technology has been one of the few areas to weather the COVID-19 financial crisis much better than other areas. Is that correct as well?
It's absolutely correct, and I think by way of background, there was a big debate among investors heading into COVID. Or of course, we didn't know it would be COVID, but whatever crisis was on the horizon, whenever that would be, there was this one camp of investors saying, tech's done very well, but when the next crisis comes, watch out below, right? This is going to fall. These companies are more expensive. They're more vulnerable. There was another camp of investors, and I think we were firmly in that camp, that said, well, no, technology is becoming systemically more important to society. And so that next crisis might actually surface more value out of technology companies. And so we're seeing that in the share price returns that really technology companies are generating in this crisis. You can see that the overall market down 10% year to date, technology companies actually eking out slight gains. So certainly very impressive performance by technology companies, even in a crisis.
So why has technology been so resilient to this crisis?
Yeah, it's a good question. And I think immediately when COVID hit us and there was this panic and an uncertainty around us, the simple reason was really leverage and debt. It's one of these things you don't think about until you have to. But technology companies, they don't really carry debt. These companies generate a lot of cash. They pay healthy dividends. They buy back stock, but they don't carry debt. And so investors didn't have to worry. Is this company okay? When its revenues fall, can it still service its debt? Will it be the debt holders that take the company away from me, the shareholder? There was no worry about that with tech companies. And so I think that was a beneficiary in the near term. And then, of course, as kind of the dust has settled and we've had time to really figure out where we are as a society, what's become obvious is we're being deprived of the physical world. And our world is becoming increasingly confined to our digital surroundings. And look at how much more we can do in this digital space. Look at how much value technology companies can deliver in that realm. And boy, how much could this be worth as we look out 1, 2, 3, 4, 5, and more years?
Vitaly, what are some of the key COVID-19 themes that technology seems to be benefiting from?
As you can imagine, as we're all observing, there's quite a few. And I think too many to talk about here, but I don't think we need to look too far further than actually this conversation right here. It's video calling, video conferencing, whatever it is that's the proper name for it. It's been around for a long time, but it's been kind of this, maybe a more obscure technology that you use once in a while. And right now, it's absolutely the panacea for people connecting with friends, for employees, and connecting within businesses. And we have the data. Companies like Microsoft are disclosing that usage has just gone exponential, and it's sort of become this critical technology. And I think down the road, I've heard some people dismiss this as, of course, temporary until we have a vaccine or until we go back out into the physical world. I don't think that's the case. And I think we're going to have a lot of management teams evaluating whether they need their employees at the office all the time. We're going to have other management teams asking whether their employees need to travel for business as much as they've used to, or if they can, do this and communicate the message as effectively, Tony.
Certainly, we've talked about our performance of the sector. We've talked about some of the key themes and, this new age of digital, this new digital world. But what are some potential downside risks or headwinds that could potentially hit this sector?
Yeah, there's always something. And I think we've been talking about it with you for a couple of years now, but regulation is always one that we watch closely, especially for the larger technology companies. Truth be told, I think more of the view now that's less of a risk in this present environment. You're seeing technology companies becoming critical partners of governments as those struggle to respond to the digital needs of their citizens. And so those companies are building up goodwill. Amazon, sort of arch nemesis of Donald Trump, you're seeing them hiring a couple 100,000 people to help out. So it's going to be incrementally more difficult to go after these companies in the next few years, especially as we have a recession at the doorstep. And then I think, this is kind of, it's one of these temporary elements, but we're all in the technology arena maybe benefiting from this increased work from home, the quarantine, the more, the physical constraints, the digital world. On the other end to that, we are going to go back out. We are going to go and play sports again and go to the arenas and engage in these physical activities broadly in the world. And I think it's also important for investors not to get carried away with individual names, and not to sort of create bubbles and say, oh my gosh, this is, the world's going to be like this forever. I'm only going to shop online. So there's always some caution warranted in certain pockets of the market.
Tali, we just have a few seconds left, but for investors who may want to diversify their investment portfolio by adding some exposure to the technology sector, how do they participate?
Tony, I think those investors should take a firm look at the TD Global Technology Leaders Index ETF, tickers TEC Tech, as you know very well. And the mindset there is that it's a pure technology product, all technology companies on it. It's global in the sense that you're participating in every developed market, not just the United States. It doesn't matter what index something is trading on, whether it's NASDAQ or something in Europe or in Japan. And most importantly, it's designed to take advantage of technology themes. So we've thought of what are the technology themes that are very prevalent today, like cloud computing or e-commerce. What's out there in the future? More machine learning, more blockchain, and that the portfolio has been designed to allow investors to participate in these themes of today and of the future.
Vitaly, thank you very much for your time.
Great to see you, Tony.